All right, we're now recording. So welcome. We're already up to the 14th Paparelli Zoom chat for entrepreneurs, which is surprising to me that this thing just keeps going. But today is so I thank you all for coming. And today is the 115th day since this federal shutdown order was put in place. And now we have states that are opening up. But in the last 4 months, we moved from doing business face to face, located in offices, going to conferences. I was talking to one of the people here about and meeting new people to basically working from home and interacting with each other on purpose, and only on video. And we've been doing this for so long that it really just seems normal to me now. I mean, it's the new routine. At least it is to me. I don't know about you, but getting here was not normal. It was a shock to the system. Forced isolation caused a lot of businesses to grow beyond anything they thought possible in the short term. And we're going to have some of those people presenting at some point. And other business had their market disappear. And today we'll be talking about what do you do when your market, in fact, just disappears. This is the Paparelli Zoom chat for entrepreneurs. It's an interactive forum for you to discuss your issues and opportunities. I want you to use this forum to learn and listen and share your experience. So I hope we help each other because I believe we are stronger together. There is a resource tab on the paparelli.com site. This includes information that you found valuable as a CEO, as an entrepreneur, and send it to me. And if it's something that I think others will find valuable, I'll post it there. So I continue to post things that people do send to me. The house rules are listed in the chat. Take a look and use this chat for questions. John Marshall, I see that he's on. John is monitoring the chat for us, and we'll jump in from time to time in my interview with Adam today. And he'll ask your questions for you. Today's topic is, what do you do when your market disappears? And I always have my entrepreneur's thought of the day right from the Bible. This one is from the Gospel of Mark. It's very short. It says, "Then all his disciples deserted him and ran away." And this was, of course, Jesus on the way to the crucifixion. And man, everybody that said they swore to him that they would stick with him through thick and thin, boom, they disappeared. And the application of this, I think, is appropriate for today. It's, now what? My market disappeared. I guess it's just up to me. And I think that's exactly where Adam Wexler found himself when all of the professional sports leagues announced they were closing. I know he felt deserted. He was standing alone. I first met Adam at one of the free lunches at the Atlanta Tech Village that they held on Fridays, which we don't have anymore. But he sponsored the lunch, and it gave him an opportunity to pitch hundreds of people whom he was buying lunch for about his product. And when I heard his pitch, I knew immediately he was the real deal. He was one heck of an entrepreneur, and I've been dealing with entrepreneurs since I met my first entrepreneur, who was Richard Brock, back in 1976. I've seen enough of these entrepreneurs in a lifetime to see that Adam is, in fact, the real deal. I fall in love with entrepreneurs, and I fell in love with him. In preparing for the meeting, it was certainly confirmed to me that he is the real deal. And my first impression did prove correct. PrizePicks is his company, and it is a game of skill which leverages off of the fantasy sports leagues, okay? You get to wage money by choosing an over or under on individual players' projected fantasy points in any professional league. PrizePicks was growing very, very rapidly. One of the investors, I think, is Atlanta Technology Angels, and was very profitable. And then COVID hit. The leagues announced their suspension one after another. And I don't know if you remember, but it was the NBA, golf, soccer, auto racing, the NCAA tournament, March Madness just canceled, tennis, hockey, the Olympics, baseball, the Boston Marathon, figure skating, and for those of you who are fans over in Europe and Asia, cricket. When these sports suspended operation, fantasy sports literally went away, and so did Adam's entire market. He went from growing revenue and profits of greater than 50% a year to zero in basically a 2-week period. Talk about a shock. Think about it. What would you do if this happened to you? Adam, I really appreciate you coming and sharing with us today. I'm so glad that you're here with us.
Thanks for having me.
I got you. Good. Why don't you start out, Adam? It's I don't know a lot of people that are in the sports sort of betting business, and I've been reticent to use that the terminology because I don't want to get you in trouble because there's so many laws I know around this that we talked about. But what drew you into sports and this whole idea of sports betting? What drew your interest in it, and how did that come about? I know it was long before you started your company.
Sure. So, I went to the University of Georgia and I was a real estate major of all things at Georgia. Commercial real estate is what we studied in school. But I also, did the music business program, and that really opened my eyes to, to kind of chasing your passions a little bit. And specifically, I had heard the advice back then, whether it's the proper advice or not, you say, go do what you love. And ironically, these days, 15 years post-graduating, I would say the better advice is to just love what you do. But nonetheless.
Why is that?
Because
why is that the better advice?
I think there's a lot of ways to love what you do. There's only so many occupations out there that you can really do what you love. So I've been fortunate that, right out of school, I got into music, in the music industry. That venture failed. That segued into social media. We took what we did from a marketing standpoint and productized that for a social media software company called Insightful. And then, over the last 5-6 years, I've been in, fantasy sports. And back in 2007, the sports industry was not getting digitized at nearly the rate that the music industry was. But it just so happened that by, around 2014, 2015, there was a lot of different things happening in the sports industry, and specifically within fantasy sports and sports betting. And you knew that sports betting was on the horizon.
Yeah, but when did all that hit your radar? So you're in the music business, you're doing Insightful, and all of a sudden you're like, oh, fantasy sports.
Yeah, I just as a consumer, I've been playing fantasy sports, for a couple of decades, and every one of my ventures that I've founded have been kind of scratching my own itch. I am a consumer of these products at the end of the day. So ultimately, our first foray into the space was helping the fantasy league commissioner collect money from their friends, because nobody wants to be that guy. And
what was the name of that company?
So that was our original prototype called Virtual Commissioner. That's what got me into the industry back in fall of 2014 at this point. And then, we quickly realized that was a very seasonal product, but it was the digital treasurer concept that we thought could apply to side bets. And,
this is like people were making side bets, individuals making side bets with each other, and you were sort of the escrow agent in effect.
Exactly.
I got it. Okay.
Rather than wait for 5 months to see who's going to win the big pot from your fantasy league, we facilitated, weekly side bets. And ultimately that's what, won us some awards within the industry. We got selected to participate in the LA Dodgers Accelerator. This was fall of 2015. And
how did they find you?
They, I'm trying to think, this was one of the first sports tech programs that was out there. And, I think they must have found us, for one, at the Fantasy Sports and Trade Association conference. And, soon thereafter, after we won some awards, we were selected for the program. But, we got out to LA, and that was the first that fall, if anybody recalls, was the first time where things went a little haywire for this business because all the attorney generals, basically came into the industry and said this is all illegal gambling. So everything that we experienced in the last couple
Who
of
are the
months.
who are the big players that got everybody's attention then?
Yeah, FanDuel and DraftKings obviously had raised hundreds of millions of dollars, had, turned around and spent that money on advertising, becoming two of the top 5 advertisers in the country overnight.
No kidding. Wow.
Naturally, this whole questionable category that was being created came under scrutiny. And we unfortunately were the kind of small darling of the industry that it's just started winning, awards like Rookie of the Year in the space. And then next thing you know, our world comes to a screeching halt, 5 years.
Talk about the moment that it came to the halt. I think that's a really good story. So you're out there at the where was it? The LA Dodgers, what was it there?
Just at LA Dodgers accelerator.
Accelerator. I didn't know they had an accelerator, but of course they do. So the I don't know if the Braves have an accelerator. I've never heard about that.
The Dodgers were the first. The group that had partnered with Techstars, it's an agency called RGA, had broken off to basically start vertical specific accelerators, and sports was one of their first. Yeah.
So you go out there and you're ready to give your pitch because you're expecting to raise money, right?
Oh yeah, I mean,
how much money were you looking to raise?
We had done an angel raise that summer.
This is with a company called PrizePicks. What? Side prize, not PrizePicks. And we didn't get to PrizePicks yet. Okay, yeah. So this is your first market disappearing event. So tell us what happened.
Yeah, it was unfolding in real time that whole fall that we were out in LA. The CEO of DraftKings went from being on the cover of Fortune magazine one month to being the poster child of an outside the lines ESPN piece the next month. So it was happening, and it was a lot to keep up with then. And then, the day of our demo day, which we had been prepping, as anybody who would have done an accelerator would know, we've been prepping for 3 or 4 weeks, practicing. I'm sitting in the Dodgers dugout because we're at Chavez Ravine Stadium, and somebody comes over and taps me on the shoulder and says, "Did you hear the news out of New York?" And I didn't know what they were talking about. And they said, the New York Attorney General just said this is all illegal gambling. And there had been a couple states that had already come out and said that, but the big domino was waiting for New York's assessment of the situation. And this was 2 hours before I was set to go on stage in front of 1,000 people. And needless to say, I had to acknowledge it because it was a national news story. And this was, whether it was New York Times, Wall Street Journal, it was a very big story that day. And so I went.
What did you say?
Yeah, I said you might have heard a thing or two about daily fantasy sports this fall or even this afternoon. And we went from ideally looking to raise low 7 figures to basically walking out of the program having only taken one check, and that was the smallest check we ever took for $12,500.
Oh man, what a deal! So did you just at that point you get off the stage, you take your 12.5? I don't know what you told the person that you took the 12.5 from, because you didn't have a business model anymore, right?
We still had a business model. We just didn't have a bright outlook anymore.
So what did you do?
Yeah, we were 6 guys, ready to scale up, and we came back to Atlanta, and a month later we were 1 person on salary scaling down. So we got stopped in our tracks, but in the grand scheme of things, that product was a bit flawed, and ultimately, I stuck with the industry, and ultimately, landed on a better product market fit, and that's where PrizePicks came from. What
happened to that investor that wrote you the check for 12.5?
Well, unfortunately, he's passed away. He's my one and only investor who passed away, who now is that investment is with his sons. But no, he at the time he had just bet on me. He understood that the market was a bit in turmoil at the time, and I was just grateful that somebody was willing to take that gamble. But it was tough sledding, for a little while.
So what was the time between that presentation to Prize Picks getting started? How long was that?
So this was that presentation was November of 2015, and then Prize Picks didn't really get off the ground until basically August, call it August of 2017. So close to 2 years later.
Well, this
I,
was the first body punch that you ever took, with a market just disappearing.
oh yeah,
All
we
right.
tried to make it. We tried to make another go at it the following
Yeah.
fall with Side Prize, but we couldn't. Nobody wanted to invest in the category, and we didn't have enough ammo to really
I
get
got
off
it.
the ground.
So
And
tell us
then
how you get to Prize Picks. Give us that story.
yeah, the big kind of the big kind of moment that I think really catapulted us forward was when the Supreme Court said they were going to take up this New Jersey sports betting case. And that fall of 2016, we had been discussing the notion of games against the house, or what we call single player fantasy instead of multiplayer peer to peer. And we dabbled with a couple things, but then nothing too meaningful came out of it. And then we kind of went dark for the first half of 2017, and then the Supreme Court says they're going to take up the New Jersey case that summer. And I knew exactly what I wanted to do at that point, and that was a game against the house. And once I figured out that was the category that I wanted to play in, it was really just a matter of what's the ideal format. So we toyed around with a couple of formats in that early fall of 2017, and then it was October of 2017 where I figured out which of the two had the better business model, was the better product market fit, and was fortunate to team up with one of our early engineers at Insightful, and we've kind of been off to the races ever since, or at least until the pandemic.
When did you start raising? And then you started raising money, right?
We raised, this Prize Picks just has a great inherent business model, because if anybody knows anything about parlays, the game is rooted all around parlays. So it's got amazing margins relative to, if you know anything about sports betting, straight bets typically hold up, close to 5%. Well, we hold, 5 to 6x that on a typical month. So we were able to largely, grow the business just through revenue and profits out of the gates, to accelerate things, and as well as, look at expansion opportunities.
How did people become aware of you? Like you're saying, you grew it out of the gate. I mean, you can't. So there had to be some level of awareness. So you had to get money from somewhere, kind of.
As a scrappy entrepreneur, where it all starts is, just working my network, and fortunately, we had a product that could appeal to a lot of my peers, and people
that just
behind
says
me.
who you hang with. See, they're all. Go ahead.
I got a lot of sports fans, so some would call them gamblers, but yeah. So was able to test the product out with the network and the extended network, and then we started putting money into social advertising to really grow it from there, and then referral marketing has always been a big part of our strategy. We've always been able to give pretty generous referral offers. And affiliate marketing has now become one of our top sources as well.
So when did you decide that you were going to raise money then?
So we raised money for Prize Picks about a year into it. So that was fall 2018. And then we raised some more money in the summer of 2019. And that was to convert all of our note holders. That was the primary motivation. And then we let's see, I guess we raised at a 10 million valuation last summer, and we basically more than tripled our numbers and our metrics across the board by the end of the year in 6 months. So in Q1,
the business in fact took off.
Oh yeah. This past football season, we really just hockey stick, started shooting up, in the month of December. For example, we pulled in over 400,000 in gross gaming revenue. Okay. Having done, I think, sub 100,000 6 months before. Mm-hmm. And then we have been prepping the business to do a raise in Q1 obviously we knew that there was going to be a lot of diligence. So we were just slicing and dicing all of our data as much as we could, prepping it for a raise that was going to commence, that was supposed to commence in mid-March, because we were going to wait until our home state of Georgia decided if they were going to legalize sports betting. So we wanted to wait till the legislative session wrapped up, which wasn't going to happen until, middle of March. So I took a vacation the first half of March, and it didn't turn out to be much of a vacation, but
where did you go? Did you tell me you're on the West Coast?
Yeah, I was in Mexico.
You were, okay. And what happened?
I was on the phone the whole time I was there, basically, and I had to fly back, a day early because things just started, getting out of hand. As you mentioned earlier, that Wednesday was when the Rudy Gobert news broke, and that was the big domino. And earlier that day, I had seen there was a player from the Juventus soccer team in Italy that had come down with it. So I said, that's not a good sign. And then, a couple hours later, Rudy Gobert, this NBA All-Star who's from France, who's well known across the world, he comes down with it, and NBA shuts off. And I never would have expected the entire world's professional leagues to shut off over essentially a matter of 72, 96 hours, but it was one after another.
What were your thoughts when those things started to shut off?
We were not prepared for this.
What did you do? Get yourself sort of a tequila and a cigar and kind of sit at the bar there in Mexico and say, what do I do now?
There was definitely it was a bit surreal, just kind of peer off into the ocean and figure out, okay, I gotta head back now. And this is a completely different ball game than what was supposed to happen. What did you do when you headed back? So flew back a night early. I wasn't supposed to get back until that Friday, but I needed to get back so I could get a day in the office.
Was everybody shut down by then? In other words, were all sports then announced that they shut down by the time you got back?
No, not everything was shut down, but our core revenue drivers, we had, I think March Madness had basically been called off, which was what we were very much looking forward to. NBA, all the core ones had basically gone by the wayside. I think I told you the other day that I think it was by Sunday, one of the best things we could offer was Mexican professional soccer, and it just kind of blew me away how many of our customers gravitated to our game format for Mexican soccer, something that we had never offered before. But I think it just went to show that we had created a fairly addictive kind of game. Not addictive in a bad way, but we want it to be a part of your daily sports experience.
I think that you used a term for me when you described your market, and you just used it in term, and this is people who are always looking for action. Isn't that what you told me?
Yep.
Yeah. And that's really the core of your marketplace is what you're saying. So there's something, they always have to have something going on. So what you learned is they didn't care that it was Mexican soccer, which nobody ever hears about or covers, right?
Yeah, it really didn't matter. And then I think that was proven that much more so when we kind of hit the reset button and figured out what we could offer, in April and into May. And, from there, Q2 largely turned into an R&D quarter for us and things that
what happened before you get to that, though. Before you get to that, I think you're skipping on one thing I want you to cover is to say, so when you got back, you're looking at this and you see your revenue, you see it. I mean, you're real time, right? So these events are happening. These people are betting on these or putting parlays on these sport games. And wait a second here. Sorry about that. And you're real time seeing your revenue start to drop. Right? How much of an impact did it have?
Well, so the way we had been operating the business, we had been comfortable operating at a loss in like December and January. We kind of ramped up customer acquisition spend because our payback periods are incredibly quick. I mean, we'll typically pay back or we'll break even on a new customer in 2 to 3 months. Mm-hmm. And so we were comfortable, going in the hole, towards the end of the year, beginning of this year. But then as we were heading into that raise, we wanted to kind of get to cash flow neutral. And unfortunately, we just didn't, get a chance to really pay back a lot of those customers that we acquired, in January and some into February. So we were left, I think I might've mentioned the other day, we were left with like a Facebook bill that wasn't very appetizing. We were left with a AX bill, wasn't that great. So we definitely had some short-term liabilities that were kind of hanging over us, but fortunately these were with, large organizations that, we were able to, work some payment plans with them, but we ended up paying those down once we did a bridge raise. But I think, one thing that you may be alluding to that we had spoken about was, I came back that Thursday night.
Yeah.
Our fixed burn was $170K a month. And we had been talking about just trimming the fat, that week. And even before that, before we had been we had played the come a little bit and kind of started, beefing up the team ahead of a raise just because everything was looking rosy. And we thought, we're going to, get prepared for March Madness and just roll into that with the necessary resources in place. And sure enough, okay, we're like, all right, we got to, slow things down. So I came back to Atlanta thinking we were going to trim the fat. And, fortunately, I walk into the office on Friday and sit down with the kind of brain trust. And it was very apparent that we couldn't go another pay period.
Who was the brain trust? Like what kind of people?
It was my co-founder, my fractional CFO, and then one other peer and teammate who we knew was a part of the core operation.
Okay.
So we wanted him to be a part of the decision-making process. And yeah, we went from 170K in fixed expenses to 20K overnight. We went from 18 full-time, 30 part-time to only one person on full-time salary. And that was my former co-founder of my previous two ventures who had literally just started that Monday. We got a great deal for him. And I didn't want to, take back anything. I wanted this to be a smooth process for him. We were going to get through this. I'll always figure out a way to get through something like this, but I didn't want him to have.
But you're sitting there and you're saying that, was this before you realized that people were still your market would still lay bets on the Mexican soccer league?
Yeah, but we knew that NBA wasn't.
You knew with March Madness going away that was the big thing that you were really that was gonna be your pop. How did you? But a lot of times what happens is we as entrepreneurs, I mean, we're entrepreneurs because we're optimistic. Okay. So we sort of rationalize. You got a team that you pulled together. You got 18 people. It's sort of going, yeah, this thing happened, but I'm sure there's going to be a way out. So you sort of want to carry everybody because something good's going to happen, even though this looks terrible today. But you didn't do that. How did you come to a decision? I mean, that is radical what you did.
It surely helped me that everybody on the team, really understood the gravity of the situation and the fact that we just lost all of our revenue. So it made my life a little easier when I had to have all these one-on-ones and, tell them that we couldn't get through another pay cycle or else we were going to run this business into the ground. Fortunately, we were still in the midst of a pay cycle. So we got them that. Another thing that, I ended up doing was anybody whose vesting schedules, hadn't, gone all the way through, we wiped out the cliff necessity or the requirement. So we granted everybody their options that they had earned that we weren't bringing back. And then the biggest thing with the, kind of the first exercise that we did was really separating out our must-have, our should-have, and our nice-to-have expenses. And when it came down to our must-haves, like, it didn't really require.
Who came up with that methodology?
That's something that just kind of comes natural to me.
Okay.
I've been bootstrapping startups for 15 years. So
you got must-have, should-haves,
and nice-to-haves.
And nice-to-haves. Okay.
And I'll also tell you when one of the only softwares that made that list was Slack, I immediately turned around and bought a little Slack stock. Because we knew that was essential to an operation, especially one that was remote and one that, essentially, operates 24/7. But yeah, so, the core team, needed to be four of us. There were four must-have, human resources. And then there were, the should have team was another 4 or so. So we quickly, we hit the reset button. And then we quickly, got back with, or I should take it back, even heading into the next week, the immediate thing that I did, knowing that we couldn't outlay any cash, was I started having discussions with the should have team about, hey, let's revise your stock packages. And in this kind of environment, I think it was important to err on the side of being more generous.
This is what you would call the core team.
The core team was 4 of us,
and then this is the next level out, if you will.
Correct.
Okay, so tell me what you did with stock.
Yeah, so outside of me and the co-founder, we for all the other 6, or I guess it was 7 guys, we had individual discussions about where they stood from a stock option standpoint, and what we would what we would do to revise those packages. And as I was about to say, like we decided to be quite generous with the stock offering that we did. And every one of them believed in the long term of this business. I mean, and I think it's a testament to they have more data to go off of than anybody on the outside looking in. And they really, believe that, hey, this was just a bump in the road, and we were going to get through this, and we were going to power through as a team. And, I think they definitely all appreciated the opportunity to earn more stock. And fortunately, I have a young team of scrappy, startup athletes, as I would call them. And they were willing and able to, go down to ramen noodles and basically, get through the worst of times.
And live with their parents.
Many of them were already there.
They were already there. Okay. So how many, I had a question. So of the 18 people, how many people were included in that sort of equity discussion, if you will?
Every one of our employees had
all 18.
All 18, as well as a number of the part-time people, were tied into the long-term, outlook of the through stock option. I'm a big believer.
Adam, this is John Marshall. Question. So then you and the founders then had to make that conscious decision to release some of your stock.
Yeah, I don't even really look at it like that. Never did it go through my mind about that I've got to release stock. It was more about what is the appropriate compensation for these guys. If I can't give them cash, how much should I give them for stock, and through over what period? Because I need a bit of a commitment here. Hey, we're don't depend on any cash coming in. Give me 3 months. Let's get through this. I forget exactly how those discussions went, because they happened a lot very quickly. But the other thing that in a sense was fortunate is that these guys had nowhere to turn. Like, I mean, they basically, it was, I was hoping that
where am I going to go anyway? Right.
Yeah. I was hoping that they would interpret this properly as being a generous offer. At least in my mind, it was, I couldn't give you cash, but I'm going to give you even more in stock options, and definitely in the grand scheme of things for the should have team that we kept on. They're the big winners out of this entire process. They stuck with us, and they're going to be rewarded handsomely.
Did you do a well, this is really interesting. There's a lot of entrepreneurs that don't do this, and I compliment you on this, is that, we as entrepreneurs, we're working for equity from the beginning. That's why we work, right? That's why a lot of times you weren't getting paid through all this. And then, but, to kind of move that on and say, look, I'm working for equity. Now I don't have cash. Will you be willing to work for equity? That really does separate, those that are there just for simply a paycheck and those that believe in what you're doing. Right?
Absolutely. And that's absolutely true. And I think it was a big testament to, the business that we had built, and that we, and the outlook for the future in the long term. But it's also understandable when certain people, can't go down that path. So for example, we couldn't hold on to our VP of engineering, even though we tried. We tried to get creative, but he was the most expensive line item, and we just had to, we had to move on. But I wanted to make sure that he was in a good spot. So Fortunately, a former colleague of mine is who picked him up. He had just secured some capital right before the pandemic, so they were in a much more favorable financial position than we were.
But you're right. But some people actually, yeah, they got wife, kids, they got like real expenses, or they put themselves in a position where they have real expenses, and they need cash. You're
Absolutely.
right about that. But did you do sort of a formula, for example, to say, was it arbitrary, or did you have a formula that said, look, this is how much you would have gotten paid. Here's what the value of the stock is. Here's what we're going to pay. Was there something like that you did?
Did some of that. Often it's, also a bit of a just kind of a round number exercise, because a lot when you're dealing with a lot of younger people, they don't fully grasp, what the options, mean. So in some cases it was just like we rounded people up to, 1 point, or, wherever they were before. But
tell me more about that, because that's a really important point. A lot of times equity doesn't mean anything to anybody, especially in early stage companies where it's a privately held company. So you don't have sort of public markets. It's one thing to say, oh yeah, I've got stock in Microsoft, and every day I can see what's happening to it. So I can see value, but I have no idea. So people don't value, many cases, equity in small companies. So how did you talk about it?
I had to educate them to a large degree about, what their current stock position was, and kind of the value based off of the previous round, based off of the round that we would have done. Kind of, it's up to their discretion, kind of how they would stick a value on it in present moment. And then we also said, okay, well, if this business goes and, raises money at X percentage and we get diluted this bit, this is where you would be with your new stock position. So I tried to, put it in perspective for them. And obviously you also got to sell the dream a bit. So I also said, hey, if we take this thing, to a 9-figure or above outcome, this is how much you stand to make. And I think that's obviously important to make sure that they're excited about the future.
Well, that's what we're in it for. How long did it take you? I'm sure that those bills for Facebook, and who was the other social media company you owed a lot of money to?
Well, it was Facebook and Amex that we had our 2 big bills with.
And Amex. Okay. I'm sure that those were big numbers. How long did it take you to pay those off? Where'd you find the cash for that?
So, my first order of business is not, I had said the Tuesday before my world got rocked that, I felt bad for my friends in the travel and hospitality, worlds. And then, 48 hours later, we're the ones, getting, punched in the face even worse. I felt bad for, I was especially cognizant of the small businesses that we owed money to, some of our affiliate partners, for example. So I wanted to pay down those bills first and foremost. The moment we were able to do so, those guys were going to get paid. And then, then it was a matter of just like, speaking with Amex and Facebook about a payment plan, which we figured that they would be willing to do, which sure enough they were. But then we got going pretty quickly, with a bridge raise. Once the news cycle started to turn around about the sports calendar, that's when we were able to get some existing investors as well as some new investors to get in. And then
how much was the bridge?
Yeah, we only set out to raise $500,000, maybe a little less. And we had a group that we had been talking to pre-pandemic back in January that wanted to take the whole thing, because we had brought that we were set to raise $5 million on a $30 million pre, and we basically had then turned around and gone all the way down to a 12.5 cap note. So it was a great deal if you just look at the pure numbers and you believe in the sports calendar coming back.
That was really smart, because a lot of times you said, look, it was 30 million pre, it's worth 30 million pre. We know it's all going to come back again. It's still that number. But you said, no, I want to get the money in. I want to pay these people off. I'll take the discount and I'll take the dilution. I mean, why did you do that? That's unusual. I'll tell you that.
Well, for one, the market wouldn't bear much more, There was a popular tweet that went around at the time that said, a flat round is an up round in this environment. And I just wasn't going to buy into that because we made too much progress, and we worked our asses off, to get to a bit, at the very least, a bit of an up round. So 12.5 is as low as I was going to go. In fact, if I hadn't already promised some of my existing investors that it was going to be 12.5 cap, by the time I started collecting checks middle of April, I was already ready to do 15 because the calendar had started to get solidified.
Yeah,
It was
the news started getting positive. Yeah.
and
What happened? So
draft-
take me to then what's happening. So you're down to one person, you and another guy, everybody else is working for equity. When did it all get back to people are starting to get paid again? And tell me the rest of the story here. Kind of catch me up quickly as to and what you see happening going forward.
Yeah, I mean, once we, got the money through the door, I think once we got to a certain threshold, we started to put everybody back on a salary, but it wasn't going to be their full-blown salary like they had before because they had just gotten these rich equity packages. So we said, hey, we want to make sure you got enough food to, cover your expenses, but don't go crazy or anything. And obviously, it helped that people weren't spending as much as they were pre-pandemic. And then, we basically ended up raising, $850 on those terms, which was definitely more than we had set out to do. But we were able to check a couple boxes. And that was also how I looked at this raise is we didn't have enough investors with the ability to follow on. We didn't have, any name brand investors. So we got Phil Hellmuth, who's the most accomplished poker player in the world. And we got a couple, funds that could follow on in the future. So we checked a couple boxes, took in more money than we needed. And then, soon thereafter, we decided that, hey, we're going to want to get back in customer acquisition mode soon enough. So we actually went ahead and paid the full Facebook bill down just because we had that more cash than we had, needed. And we stabilized the business. We turned a profit in May off of primarily esports. And obviously having brought down our expenses tremendously. So
Guys playing Madden football.
I mean, we're not the guys that are playing Madden. We're basically facilitating the action on the guys that are playing.
No, I know. That's what I'm saying. But you move from professional sports to esports, okay, which is pretty amazing, which says a lot about esports too. I know that Sig Mosley is real interested in the esports marketplace as Neuro Ventures. So Mosley Ventures rather. But that's so now what do you see as your prospects going forward?
I mean, if this sports calendar sticks, there's an argument to be made that this is a dream scenario for us because, not only do you have no fans in the stands, which means they're all, stuck at home looking for a way to engage with these games. And it's a lot harder to engage when you're not at the actual game. So we would like to think that our product becomes that much more of a bit of a necessity. And then beyond that, you've got games all day long. Before you had 2 slates of games per night, your 7:00 games, your 10:00 games. Now you've got MLS for breakfast. You've got NHL and NBA for lunch, MLB for your mid-afternoon snack. I mean, games all day long, in the next couple weeks. So it's looking pretty promising right now.
So you got action again. You got action around every meal of the day.
Exactly. College football, and here's the other thing, college football in the spring, which I think is the most likely scenario right now, is actually, I would argue, a great thing for us because that just means there should be 10 months of compelling football to watch. I still think it's more than likely that there's NFL this fall, but even if NFL goes away, we're still going to have I'm more confident in the other leagues at this point, and they're still.
Okay, so you got a great prospects ahead of you. But if you now give me some Monday morning quarterbacking, okay? You cut your expenses completely, right? From, like you said, 18 people to 1 person, okay, on the payroll. Knowing what you know today and where this all came out, if you didn't make those cuts, what would have happened?
Yeah, knowing that we had $170K in fixed expenses, and where we were sitting in the bank, we would have been underwater, pretty quickly. So, we
couldn't have raised money. You don't think that these guys had put up the 850 and all that, or you could have raised more money around that to keep everybody alive?
I'm not sure I understood the question.
Well, you said I had no problem kind of getting that 850 in short order. It all kind of came, the people started getting better news, right? And the market started showing better news. So if you would have said, look, don't worry, we're going to keep the 170, we're going to go in a hole, burn all our cash, we'll get more cash. Would that have happened, or would you have gone out of business?
I mean, we brought down the burn enough that we were able to weather the storm immediately. And then from there, it was just
But if you didn't bring the burn down, would you have gone out of business? Or
to me, that's not even an option. Like, I've never, like,
I love that. This is somebody that's had a few businesses, understands bootstrapping companies. That is wonderful.
Yeah, I can't fathom, letting the business get to that point. And obviously, I have a fiduciary duty to be responsible with the capital and try to make the most of it. So,
wow. Well, I kind of hard the conversation, and here we are. It's 9:46, so we're already past. And so, John, I'm sure there was probably some other questions, but we kind of ran out of time. I hope everybody found this to be valuable. I'm fascinated by what you've done, Adam, and I love that you end on the fact that you have a fiduciary responsibility, that you're thinking about your shareholders. I also know that you have you're a profit thinker. Cash flow positive is a really good thing, and it keeps you healthy, and you are certainly growth minded. And I love the way you pitch things around, you can have action around every one of your meals, all the way to your midnight snack, okay, which is pretty wonderful. So, Adam, thanks for joining us today, and I thank everybody else for joining us. But there's so many good takeaways from this. Just a few that I had is, one is that Adam actually had a brain trust, I think, as he called it, when he got back together, and he listens. They're experienced business people, and he listens to them. Then what he did is he cut his expenses quickly. He didn't rationalize, which is something that we all have a tendency to do as entrepreneurs. And lastly, I think it was brilliant the way you said, I'm working for equity. I think everybody else I should share that equity with others and have them work too, because I really value my team and my people. And that came through in not only this conversation, but the conversation we had previously. So, Adam, congratulations. And I do wish you the very best as you continue to grow PrizePicks into something that will maybe, hopefully not gain the attention of the Attorney General in the state of Georgia here, okay? But rather investors, okay?
Appreciate it, Charlie.
All right. So, but these are my insights, and I'd appreciate from you guys, if everybody on the call, if you have insights from this, send them to me and I'll publish them and I'll give you credit for them, because this call is going to be republished with insights attached. So send me your insights. And I tell everybody that's on this call, watch your cash. It goes out fast. It comes in slow in some cases, and in fact, most cases, but I know that we're going to get through this. This doesn't last forever. So learn fast, decide fast like Adam did, and go fast. Next Wednesday, I've got Ed Buckley coming in, who's a successful serial entrepreneur in a B2B wellness market. He was about to raise his Series D, and COVID hit and his market pivoted, and come and find out how he pivoted with them. So it should be an interesting discussion next week. I hope it's as interesting as this one was this week. Adam, I can't thank you enough. So sign in early, catch up with everybody like a lot of us did today. We come on 15 minutes early before the 9 o'clock call. And remember, all of you, including you, Adam, I'm praying for you. I want you to be successful. It's great stuff. Thank you so much, everybody, for attending.
Appreciate it, Charlie.
Thanks, Adam.
Thanks, Charlie.